Thank you. So, well, I don't know if I have to introduce myself, but I will make it shortly anyway. I started my career as a consultant, as you just mentioned it, mainly working on strategy projects for client retention and client acquisitions for large banks, mainly large European banks. Then I worked on corporate finance, working on merger and acquisition deals in the banking industry, and so that's why I felt like Superman. I was very successful in my career in that consulting firm, these consulting firms. I was very happy. But then at some point, after the second financial crisis I had in my career, so in 2008, I started thinking like, okay, is it really what I want to do for the rest of my life, working in a bank or in the banking industry? I love technology. I love technology gadgets and all the stuff, unuseful stuff you can have. And so I decided to launch my own company. And what was that company? It was a mobile wallet solution. So we're back in 2011, so 5 years ago now. And the point for me was to think, okay, from my phone, sorry, it's not Samsung, it's Apple, but from my phone, from my mobile banking app, I can send money from Luxembourg or from France to Korea. I can make a bank transfer easily, directly from my phone. And I was at a bakery. I'm French, so I go to bakery every day. I was at the bakery, and I thought like, why can I send money to Korea? Why can't I send money to the guy that is just 1 meter from me? Okay, if you're bankers, you'll tell me, okay, those are different processes, doesn't work the same way, and so on. But on a client perspective, you can send money on the other side of the world. You can send money to the person that is in front of you. And from that, I decided to launch my company, which was called Flashes. So the concept was very easy. You download an app, and the merchant on his point of sales displays a QR code. Can be printed on the check, can be just printed somewhere on the cash desk, and you just launch the app, scan it, and the payment is done. That was that simple. We had the chance that the regulation just moved when I launched my company, the regulation in Europe, and to launch the e-money licenses, which are kind of light banking licenses, allowing you to have client deposits and to make payments. And we had the chance to have one of the very first license in Europe, e-money license, which means that we were regulated, as was a bank. The only thing that we were not allowed to make credit to people, to our clients. And I had another chance that we decided not to go only on NFC, but to have it on multiple technologies. Mainly, the main one was QR code, because this was the one that was compatible with all smartphones. Every single smartphone could read QR code. And it made it simpler to have the application accessible to everyone. The second advantage is that for NFC, it's very nice, or any contactless technology is very nice when you're in stores. But what if you want to buy online with NFC? You just cannot do it. With QR code, when I bought my plane tickets, when I was at Flashes, I just selected, okay, I had Visa, or credit card, PayPal, Flashes. I selected Flashes. I got a QR code on the screen of my computer, took my phone, flashed it, confirmed, and the payment was done. This is how a fintech can change the approach. Because all banks were only thinking about NFC, about one technology. But technology is not the point. When we talk about fintech, we're not talking about a change in technology. That can be either a change of business model or a change of business process. Of course, based on technology. But technology is only an enabler for that. Same in the previous presentation, talked about biometrics. Technology is very important, but the question is how do you apply this technology to bring added value to your consumers? And then I had the chance, I had the chance that we were one of the first. We had deployed our solution in 8 countries in Europe, also in California, in Indonesia, which was a huge market for us. I mean, 250 million people, 40% of people who had bank accounts, and only 3 or 4% who had credit cards. That was but 100% or more who had smartphones. So it was an amazing market for us. And we started also working with Japanese companies. And we had over 200,000 customers using our solution. We had 55 employees and 25 external consultants working with us, mainly software developers. We raised $18 million, and we had the chance to get acquired. Well, we were not for sale, but we had a good offer by a consortium of banks, of financial institutions. Because this is the way most fintech ends. They are acquired by financial institutions. Not all, but a lot of them. Then I took 6 months off. I would go very quickly. After 1 month I got bored, but really bored. So I decided to work on a project to support the entrepreneurs, and especially fintech entrepreneurs. To support also financial institutions. Because on one side you got entrepreneurs who don't have access to large financial institutions or to the good people in those organizations. And on the other side, when you talk to large financial institutions, they tell you that it's very difficult for them to identify which ones are credible, which ones are serious, which ones are the most promising. And then I started working on this project, presented it to different people, and including some people at KPMG. And as you may know, KPMG is very active in the fintech area for now a couple of years and investing a lot on entrepreneurs, on startups. And so I joined KPMG. I had to get back my suit. Okay, I don't have it today, but sometimes I have it, especially for official pictures. And I arrived there, and they proposed me to be the global lead for next generation payments. So I'm now leading this next generation payment initiative, expertise, that allows me to travel a lot in different regions. And what I see in those different regions is that cultures are different, languages are different, currencies are different, but the global trends are the same. Because the millennials, so like the 5-year-old daughter of the previous speaker, or my 7-year-old daughter, they don't know what is a music tape, what is a CD-ROM. They don't know that. This is another generation. My daughter only uses Netflix. She doesn't know what is TV, what is a TV channel. She uses Netflix on her iPad. And that's the only thing she knows. I'm very close to payments coming. And so the other part of my job is that I've launched what is called the Cube, KHUBE, KPMG Hub for Entrepreneurs. This is a non-profit department of KPMG, which means that our objective is not to make money on it. We just want to cover our costs. And what we do, I have 2 types of clients, what I could call clients. First, entrepreneurs, startups, innovative companies. We support them to grow their solution, and especially in Europe, to deploy their solution in Europe. A second type of client, these are financial institutions, large IT companies, large retailers. And we help those companies to identify the right companies for them. Usually in more or less a specific area, but can be wider areas. So those are my 2 jobs today. Let's go back to payments. The world is changing. Okay, you all know that. But it's changing faster than ever. Really. It goes amazingly fast. And sometimes when we are in large corporates, and now I'm now part again of a large corporate, we don't always realize how fast things are changing. When I talk to a lot of executives in large banks, in large financial institutions more generally, they all know that things are changing, but they don't always understand how fast it goes. It's not a question of 10 years, 15 years, 20 years. And before going back to payments, I would just give a few examples. Before this fund was released, so in 2007, so just 9 years ago, the main phone manufacturer, or even smartphone manufacturer, was Nokia. 5 years later, we're talking about 65% market share worldwide. 65% market share. It's not just the leader, the number one. It's better than all the other one altogether. 5 years later, not existing anymore. Sometimes I hear, okay, but it's smartphone, telco. That's telco. But finance is very difficult. So I'll tell them about space. When Elon Musk decided to launch SpaceX, to launch satellites in space, everyone was laughing at him. Now look at the market share of SpaceX just a few years later. And when people tell me finance is very difficult, I just tell them, okay, but have a look at aerospace. Sending an object in space is something different than issuing a credit card. And so a lot of companies are in danger now. Financial institutions are in danger now. Not because all banks will disappear. I don't believe in it. Banks will always be there. The question is, which are the ones that will evolve? Samsung, when Nokia had 65% market share, Samsung was very strong in mobile phones. Nothing to do with Nokia, but Samsung was very strong. And Samsung was smart enough to launch smartphones. A whole range of smartphones, low-end, high-end, whatever. Losing money for years on this activity, but now becoming a global leader on mobile phones. This is a picture, you might have seen that one. It was not from me, it's not from me. It's at the Vatican in 2005 when the new Pope was elected. You can see some candles, and on the bottom right of the first picture you see a phone. This is in 2013. Just 8 years. So it's not a question of having people that are a bit nerd, that's me, or whatever. This is a question of everyone. Everyone is using that. Even I would say the most conservative people you could consider. They are all using new tools. How can you imagine that those people are using internet all day long, are using their smartphones all day long, have changed their habits, and that for the financial industry, they would not change those habits. And at the same time, okay, I took this example, but it could be the same for every credit card. This is a credit card in 1966. This is a credit card in 2016. There's a chip now. And they changed the color for some of them. So, real life, financial industry. Okay, it's a caricature. I agree, there were a lot of changes. But basically, payment means have not evolved. Technology has evolved. Okay, there are chips now, there are contactless chips, more security on it. But those are small evolutions. We're not talking about a complete change of habits, complete change of mind, like the population has now. Just a few examples. I will not stay long on that slide, but just a few examples of the evolution. Sorry, I didn't include UnionPay, but you can see that there are a lot of players coming in because technology enabled new players coming in. Supported also, of course, by regulation. But what's the problem? Because if you have a startup, if you have a new solution, you must have a problem. Payment works. Globally, when I pay with my credit card, it works. So why should I change my habit as being a customer? People don't want to change their habits. They don't like it. People don't like change. But when you go in a supermarket, what's the complex part? It's not the payment part. But I go to the line, and when it's my turn, okay, I give my coupons. I give my loyalty card. And then I give my credit card. And at the same time, I have to put stuff in my bag. What if I could do everything in one step? Which was basically the success of the company I launched. It was not a mobile wallet company, a mobile payment company. It was a checkout solution. All those steps were included in it. But this is, I would not say it's outdated already, but what's coming next is not only that, but it's going further. When I go on Amazon or plenty of websites, it's very easy to make shopping. I just select what I want and I say, okay, I'll buy. Usually I don't even have to enter my credit card details or my address because the website already has it. So the time I spent on the website is just selecting what I want and saying, okay, I want it, and the day after I have it. Why can't I do this when I go to the supermarket? Why is it sometimes so difficult? You might recognize it. This is one of the few mobile payment solutions that was so successful. This is the Starbucks app. 1 year after it was launched, it was 11% of the buyers of the client of Starbucks that were using it. 11%. 1 out of 10 people. You look at the adoption rate, it's just amazing. Why? Because you don't need to have credit card or cash or whatever. Just have your phone and you always have it. Anyway. You put it and you got your coupons, you got your loyalty, you got your payment that is processed. All in one step, in one checkout step. So payment itself, nobody cares about it. What's important is to bring value to the consumer. Another example is the Oyster system, which is very close for the T-Money card here, except that it's not only on one card, so it's for the subway in London. It's not only one card. Can be just on one credit card, can be on a specific plastic card, can be on the phone, can be on the Apple Watch, or Samsung Gear, whatever solution. And most of the people are using it. I don't have the stats, I'm sorry for that, but a lot of people are using it. Most of the people are using it because it's convenient. Because like the T-Money card, you don't have any more. You don't have any more of it. So a lot of companies, and the payment area is not just payment. You will have about product, about mobile payment, about loyalty and rewards, about offers and coupons, all the stuff. But I have a lot of people ask me, yeah, but can you tell me, especially on mobile payment? Okay, I can talk about it for 24 hours. That's not the problem. But mobile payment by itself is just one piece of the solution. You have to get the overall picture. So let's go 10 years later. In 10 years, well, it's my vision, it's not KPMG vision or whatever, it's my personal vision, but the vision of the future of payments. What will be the process for the consumer? Oh, it's not a bug. Payment process will just be transparent for the user. The user won't see the payment anymore because people don't like to pay. It can be on credit card, on mobile phone, whatever. People don't like to pay. It's not the fun part of shopping. Okay, so you might say I'm dreaming, but today we can see it online with one Amazon one-click solution that I discussed very quickly before. I'd never see the payment. I have I select my stuff and I just click on one button, and there's nothing else. I just have a message. Okay, thank you. You will receive your order tomorrow. Okay, it works very well for online, but what for offline? Just another example. Uber. When you use Uber, you never make any payment, or you never see the payment. And it's not digital goods. Those are physical goods, kind of physical goods. That's a service that is given to you. I call Uber, I get in the car, I get out of the car. I never make any payment. Why couldn't I do it in a supermarket? It's not that different. And on top of that, if I'm a Starwood client, so with a Sheraton, Marriott now, for Four Seasons and so ever, I got some loyalty points. This is what can be used today. And so payment can already be transparent today in the physical world. It's not just digital. Airbnb is the same. I can rent a house without any time having to get my credit card or entering my credit card details. And I think I'm good for the timing, more or less. So thank you. If you have any question, please feel free to come afterwards. I'll be very happy to discuss it. Thank you.
Do we have any questions from the floor? Okay, sir.
The one particular example where that we provided the best value to the customer, the payment become very transparent, but where there is the engineering, programming obstacle, why there is no legal obstacle. So we can all the time just solve the engineering problem easily, but the legal problem, it takes forever. So can you give me a very good example where we can provide the best value to the customer in payment, where there is no legal requirement, no legal obstacle, but there is some entry barrier from the programming aspect, where the engineer can flourish?
I think the question, more than the technology, is what solution you can bring. And of course you need the technology. And you need some very good engineers. Can be big data, for example, for peer-to-peer lending. You need to develop credit risk algorithms. For I'm working with a company, a startup company, Fintech company, that is working on the regulatory environment and providing an investment risk profile for the client based on behavioral finance algorithms, so very advanced algorithms. And they are providing those solutions to financial institutions, kind of as a software. This is Fintech. This is something new with a different approach, because this is kind of a gamified risk profile form. So it's a funny stuff, but based on very strong algorithms. What's important is to bring value to the clients. And you always have, whatever the industry, legal constraints. Okay, you have maybe some more sometimes in financial industry, but if you take in the health industry, it's not better. If you take in the space industry, it's not better. The car industry is not better because you have to have a lot of agreements behind. So the question of regulation, okay, can be an entry barrier, clearly, but there are some reasons behind that. But you can also find different ways from the banks and financial institutions. For example, for KYC, so when you need to know your customer, especially for when a customer wants to open an account. When I launched my company, everyone told me, no, but you need physical meetings. You need to physically meet the guys. Okay, I just cannot do it. In a startup, I don't have a network of branches. Okay, but we can find a way digitally to make it. And it was not even allowed to make it by video or whatever. So we found another way, which was going through banks who already had relationships, or through large retailers who already had relationships, physical relationships. So you always find a way to regulation. Did I answer your question?
Any other questions from the floor? I have a personal comment rather than a question. When you said during the process of purchase, there will be no sign of payment, I personally totally agree as a future of payment. I think the KPM should make it a corporate position, not just a personal position.
But it might become a corporate position, I don't know. But
well, merci beaucoup. Thank you very much.
Okay, thanks a lot.